Aryan and Adya were partners in a firm sharing profits and losses in the ratio 3 is to 1. Their balance sheets on 31st March 2024 was as follows. Okay, and we've been given data within the balance sheet. Dave was admitted into the firm on 1st of April 2024 for one-fifth share in the profits of the firm on the following terms. Okay, and we've been given adjustments. We've been asked to prepare a revaluation account and a partner's capital account, right? And I'm going to do that here. We have a revaluation account, okay, and a partner's partner's capital account. Okay, and keep in mind, revaluation and partner's capital account can actually happen side by side if you're doing it on uh, in your answer script. Okay, so preferably a middle page, it'll be easier for you to go back and forth. Now, obviously, when we start, we have to write in the books. Okay, so uh, keep in mind that we are admitting a new partner right now. So, as far as the revaluation account is concerned, it is before we make that admission. It is before we admit the new partner. And that is why it will only be in the books of Aryan and Adya. We were making for the whole balance sheet, the new balance sheet after readmission, then it would have been Messrs. Aryan, Adya, and Dev. Anyway, going forward, we have the revaluation account and partners capital account to fill up. And I'm going to go line by line. Okay. Capitals for Aryan and Adya are given to us. It'll help to write down Dev now only. Okay, so I am going to go to the revaluation account, and in the revaluation account, before the revaluation account begins, it would actually be a good idea. Okay, it would actually be a good idea to have in the books of. Okay, and I'm going to make some space in the books of, in the books of Aryan and Adya. Okay, and I, yeah, the spellings are right. Aryan, Adya, and Dev are the partners. So we have Aryan, Adya, and Dev. Aryan, Adya, and Dev. Okay, now I'm going to go line by line. Aryan and Adya, we have got capital account balances. Okay, remember, capital account, it's on the liability side. All items on the liability side have a credit balance. All items on the asset side have a debit balance, just for your reference. Okay, so I'm going to go to the capital account on the credit side and I'm going to write by balance, by balance brought down. Okay, and we are talking about 3,20,000 and 2,40,000. 3,20,000 and 2,40,000. Okay, then workmen's compensation reserve is 20,000. That has to be broken up and given to the old partners in the old ratio. So 20,000 into 3 by 4 and similarly into 1 by 4. Okay, so if you do 20,000 into 1 by 4, okay, you're going to end up with 5,000, which you can then multiply into 3 and get 15,000. And that also, keep in mind, workmen's compensation reserve has a credit balance. If you want to make it zero, you have to debit. So what we're doing is workmen compensation reserve account debit, and we are crediting the partner's capital account. Okay, so uh, it'll be by workmen's compensation reserve. Okay, by workmen's work. Okay, and men. Okay, workmen's compensation reserve. Compensation reserve account. Okay, reserve account. and we had calculated 15,000 and 5,000. Done. Okay, now why am I not doing the reval first? Because I'm going line by line. If you do that, okay, in sequence, you're less likely to make a mistake. Now, bank loan, creditors, machinery, furniture, all of these people will only turn up if they have adjustments. Okay. And like that, it's a good idea to read through once and mark those adjustments. So, machinery, I can see as an adjustment. Okay. Why am I marking? If we had to make a balance sheet, then the adjustment would have gone there. But I'm still doing it anyway. Provision for doubtful debts was to be created at 5%. We have an old one, so we'll make a mark over there as well. A liability for 3,500 included in creditors are not likely to rise, so we have a mark for creditors. Anyway, this is where it stands. On the asset side, keep in mind we have got a debit balance in the profit and loss account. Okay, which means we have accumulated losses. Those losses again belong to the old partners in the old ratio. It happens to be the same 20,000 and therefore the same calculations. All right, but since P&L account has a debit balance, to make it zero, you must credit. So this time we are going to debit the partner's capital account and we're going to credit the P&L account. Okay, so the profit and loss account entry is going to come on the debit side of the partner's capital account. To profit and loss account. The profit and loss account 15,000 and 5,000. Now, going back over here. Okay, so we are done dealing with this. Dave will bring capital proportionate to his share in the profits of the firm. Okay, we know that it is 1/5 proportionate to his share in the profits. So let's see. Going forward, we'll be able to calculate something. Goodwill of the firm was valued at 2 lakhs, and they will bring in his share of goodwill premium in cash. Now, when that is happening, first of all, total goodwill is 2 lakhs. Okay. And his share is 1/5. Okay. So he is going to bring 40,000, and that 40,000 has to be given to the partners in their sacrifice ratio. Now, if we have an old ratio and they are coming in for a certain share and no new ratio is given in such a case, all right. So if no information, no information is given. Okay, and the partners just coming in for a certain fraction of the total share. Then old ratio equals sacrifice ratio. Okay, this makes life easy because we have 3:1, and now we have to break up 40,000 in the ratio 3:1. And notice how 20,000 we've already done calculations, and 40,000 is the double of 20,000. So I'm guessing, all right. By the way, the journal entry when this happens is we have a cash account. We don't have a bank account. Okay, so it would have been cash account debit to premium for goodwill. Okay, premium for goodwill, and that would have been for full 40,000 and 40,000. And then we have to break that up. Okay, so it would have been premium for goodwill. Okay, and let me make some space. Okay, let's see. We have premium for goodwill debit to Aryan standing. Okay, and if 20,000 is becoming 30 is becoming of 15 and 5, 40,000 will become 30 and 10. Okay, so 40,000 is split up among them, 30,000 and 10,000. Okay, so these are the journal entries, and it's on the basis of that we are actually doing a ledger entry by premium for goodwill. And notice how I'm writing full forms over here. Okay, for your understanding in the rough work, I might use short forms, but inside the ledger, we should use full forms. Okay, and we have 30,000 and 10,000. Okay, next we have, okay, going back here. We have machinery was revalued at 4,50,000. Okay, now that is a revaluation account entry. Okay, and notice the value here. Machinery has a debit balance. It is increasing. If something that has a debit balance is increasing, then you will debit again. Add is to debit. How much it is increasing by? Okay, so if they're telling us the new value is 4,50,000 and the old value is 3,90,000, the difference is going to be 60. So in the revaluation account on the credit side, credit all incomes and gains. All right. On the credit side, we are going to write by machinery account 60,000. Then going back here, all right. By the way, the double entry would have been in the balance sheet asset side. We're not maintaining it, so I'm not bothering. The journal entry is machinery account debit to revaluation account for 60,000. Then a provision for doubtful debts is to be created at 5% on debtors. 5% on debtors, if I was to take 5% over here, I am going to get, I'm guessing 4,500. But these guys are only 1,000. That means the provision for doubtful debts, okay, has to increase till it touches 4,500. So that means it has to increase by 3,500. Now notice how the provision for doubtful debts is a deduction from the asset. If you are deducting something from an asset that has a debit balance, that means what you're actually doing is you're crediting. You are crediting. Okay. So this 1,000 has a credit balance. You want to increase it from 1,000 to 4,500. You have to credit it further by 3,500. Also, remember by default, provisions and reserves always have credit balance. Okay. So I am going to go to the revaluation account on the debit side because what do we mean by provision for doubtful debts? We mean people who are not going to pay us. We think more people are not going to pay us. That is bad for us. Debit all expenses and losses. Okay, so for 3,500 to reserve for doubtful debts. Okay, and what are they calling it? They're calling it provision for doubtful debts. So I'll also call it that. Two, provision. Provision for doubtful doubtful debts. Okay, and we have 3,500. Next, the liability of 3,500 included in creditors was not likely to arise. That means we owe people 48,000, but out of this 48,000, 3,500 people we won't have to pay. Now, uh, creditors by default have a credit balance. Okay, if it has to be reduced, if we want to reduce 3,500 from creditors, that means we are debiting. Okay, so creditors account is going to be debited by 3,500. Therefore, we have to credit the reval. Also, the fact that you don't have to pay anyone money, 3,500 rupees, that is good for you. So credit all incomes and gains. Okay, so by creditors, 3,500. Creditors, by creditors, 3,500. And now we are done with the entries except for capital. Okay, and keep in mind, I mean, in the this I have gone line by line, but strictly speaking, what should happen first? Okay, we have the opening balance, fine. The workman's compensation reserve is given to the old partners, fine. But the partner, incoming partner will bring in money. That should happen before premium for goodwill, right? Because you get them together. Okay, so one below the other is also fine, but ideally, if we have partners' capital over here, okay, the new partners' capital over here, it would have been better, but no problem. I'm just going to put it below. Anyway, that entry will mean more money coming in. Okay, and it would have been cash account debit to partners' capital, to Dave's capital. So that is by cash, but I do not have that number yet. That is going to happen last. That's going to be the last calculation. Before that, what's going to happen is we need to close the reval account. Whichever side is heavier, we write it on both the sides. So I am doing this. 60,000 plus 3,500 gives me 63,500. Okay, and notice how we have a 3,500 over here. So it's a no-brainer that we're going to end up with a balancing figure, of 60,000, which is what goes to the partner's capital account. Okay, so to profit transferred transferred to partners partners capital account, but we have to show the breakup over here, right? So who are our two partners? Dev and Adya, and we have to break it up in their ratio, and their ratio was, okay, and I'm going to go back here just to confirm, 3:1. Okay, so we break up 60,000 in the ratio 3:1. 60,000 into 3 by 4 and 60,000 into 1 by 4. Okay, so if this gives us 15,000, this should give us 45,000, which I am going ahead and putting here. 45,000, 15,000. Okay, and by the way, the 63,500, obviously, both the sides we write 63,500. Anyway, we are done. 45 and 15 is on the debit side here, or on the credit side of the partner's capital account. So by revaluation account 45,000 and 15,000. Now we are done with most of the sum. Just the last part is remaining, and that is to decide how much will the incoming partner, how much will they bring. And for that, we need to find out the balancing figure for the old partners, for the original partners. Okay, and we can find that by taking the total of the heavier side of the ledger of the partner's capital account and writing it on both the sides. Okay, let me just draw it across the board for everybody once and for all. Okay, and this should be in line. Now, um, we have 3,20,000 plus 15 plus 30 plus 45. Okay, so 45 plus 45 is 90. 3,20,000 plus 90, I think, gives us 4,10,000, which I'm writing on both the sides. 4,10,000. And then we subtract this. Okay, so in the case of Aryan, okay, so this is going to be to balance carried down. It's the closing balance. Opening balance is brought down, closing balance is carried down. Anyway, so 4,10,000 minus 15,000 gives me 3,95,000. 3,95,000. Now, again, we add. Okay, so 15 plus 5 is going to give me 20 plus 10, 30 plus 2 lakh 40, I think is 2 lakh 70, which again I can write on both the sides, 2 lakh 70,000, 2 lakh 70,000. Okay, and subtract this. So I'm going to end up with 2 lakh 65,000. Now I've got the capitals of the original two partners. Okay, and it is 3,95,000, 2 lakh 65,000, 3 lakh 95,000, and 2 lakh 65,000. And I will add both of them. Okay, and we have 0 carry 1. Okay, 6 carry 1, and 6,60,000 is what we're going to get as a total. Now, remember, the 6,60,000 belongs to the original partners, the old partners, whose current share is 4 by 5. I know that because the new partner has come in for a 1/5 share. So, if the total capital of the old partners, whose combined share in the profits of the firm going forward is going to be 4 by 5, then the new partner should bring in how much for 1/5 share? Okay, and this is cross multiplication, unitary method. X equal to 6,60,000. All I'm doing is cross multiply. I multiply this way and divide. Okay, so it's basically whatever, 4 by 5 if you want. 4 by 5x is equal to 6,60,000 into 1 by 5. Okay, and now this 4 by 5 is okay. If I want to send it on the other side, I can say x is equal to 6,60,000 into 1 by 5 into 5 by 4. Okay, and then what's going to end up happening is 5 and 5 will get cancelled. All right, so if 5 and 5 get cancelled, you take 6,60,000 and you divide it by 4. Please do the math on your own. You'll end up with 1,65,000. And that 1,65,000 is the amount of money that the incoming partners bring in. 1,65,000. And now we are in a position to finish the sum. 1,65,000, which we write on both the sides, and subtract the lighter side where there's nothing. So this also becomes 1,65,000. Okay, and with that, we are done with the sum. Right. I hope all of you all have understood. If you have any doubts, feel free to comment. And as always, please like, share, subscribe. Thank you.